that nothing in life is worthwhile unless you take risks. Nothing. Nelson Mandela said, "There is no passion to be found playing small and settling for a life that's less than the one you're capable of living."
Good morning, traders. Good afternoon, good evening, wherever you are. Hello to you. All right, today we're going to see one simple execution. It's a trade review for one of our traders. He had a play on Tesla, and we'll see how he implemented our trading plan into his play and how profitable it was for him. Amazing play, amazing trader, very new trader, but he followed the trading plan to the T. And let's see what he did and how we can help you achieve the same consistency using a trading plan. Number one, let's take a quick look at the trading plan. The trading plan is, as you see right here, trading plan has to have three parts of it. Number one is the triggers. What is your playbook? What do you have to get you into the trade? Number two is the trading strategy. What is it that actually, once you decide you have a nice play right here, what makes you decide there is a how you get in and how you get out? So our trader looked at his trading plan. It's a PDF format, fillable PDF format. He was watching Tesla, so the first thing he did, he came here and he says Tesla. That's his trade. Number two, the date. He decided that he's trading this one on November 23rd, 2022. He's doing this because when it's time to review his trade, he can pull up that one sheet of trading execution and he figures out what he did right and what he did wrong. And of course, when you realize what you did wrong after so many times, you start eliminating that problem and you become more consistent day after day, week after week, month after month. So he was watching Tesla. His trading day was November 23rd. Now, as the market opens, he was looking at his playbook, and our trading plan has 24 triggers, 24 ways. Like as you see, a single bar strategies right here to the buy side, single bar strategies to the sell side, multi-bar or pattern strategies on the buy side, and pattern strategies on the sell side. What he decided is he's going to look at these. He already know them by heart, and he's going to see what the chart gives him, if there's any triggers or not at all. The triggers is his reason to execute that trade. So once he finds the trigger, what do you think he's going to do next? He's going to go into executing that trade, which means entry strategy and exit strategy. And you got, that's all you need to know. Playbook, a trading entry strategy, and exit strategy. So when it comes to entry strategy, in case you're not familiar with our plan, our trading plan, please let us know. We'll email you that. Give us an email, send us an email at daytradingfans@gmail.com. Request a copy of that PDF format, and we can help you out, walk you through it, and show you how consistent you're going to be if you use that trading plan. So his interest strategy, our interest strategy, tells him what position of the market is he on the long side, or is he on the counter trend, or is he on the short side? Is he going with the trend? Is he going counter trend? And as you go, you can actually mark all of this stuff. So let me show you. Like he's long, for example, you can click that. If he's short, you can click that. And he goes on to blog or document his trade as he's going. Build up strategy, you can talk about that later on. It's a whole class by itself. And of course, he has to document what's his risk and his profit objectives. When is he needs to know when is he gonna take profits before he even enters the trade. And that's exactly what most people do. The problem is you go in, you don't know when you want to take profit. You think that the trade is gonna go to the moon, just like Elon Musk always says, gonna go to the moon, and it goes up in your favor, and then suddenly comes down, and you turn a winning trade into a losing trade. If that's you, I'm telling you, email us. We can get rid of that problem very quick. daytradingfans@gmail.com. So back to his trade. All right. Here is his chart. Number one, most of our traders actually execute their trades on a cell phone. I honestly believe I'm actually doing it on my cell phone too. I used to work on like the 4 screens and the 2 screens and pay for data, a lot of data to all these proprietary trading firms, and 400 here and 800 here. At this time and age, I think a cell phone provides you with everything to make you consistently profitable and make an income you can depend on as a day trader. So most of our trade reviews, most of our teaching actually teaches you in the cell phone, because cell phone is pretty much your smartphone is the future when it comes to trading. If you think about it, computer prices are going down, smartphones are going up. The price of TVs are going down, the price of smartphones are always going up year after year. That's because the smartphone is becoming the future even for day traders. So this, what you're looking at on the right side, a chart on the cell phone, and we'll see you how you executed that trade beautifully. So number one, he looked at, this is Tesla, and he decided every bar is a 5-minute bar, by the way. This red bar is 5 minutes, this green bar is 5 minutes. And he was looking on this side at his trade playbook, and he realized there is one that actually got right in front of him. That number one, the trend is bullish, the daily trend is bullish. The stock opened above his prior day close. The only thing that was bearish is the first candle. So he waited for the first candle, and bam, the second candle erased all of that. So he looks at his trade playbook or triggers playbook, and he realizes this one right here, green bar reversal. Let me highlight it for you. Green bar reversal is his play right here, and he marks that. He check marks it as his play. Now, what comes next after that? He's working with a $1,000 maximum loss per trade. So when you go to the trade plan right here, the checklist, he puts in his $1,000 maximum risk per trade, and he realizes this bar went from 172.5 to 174.5. So it's a $2 bar, and he needs to put his stop right under that bar, which tells him his stop loss has to be $2 per share. So that's exactly what he does here. He puts $2 maximum risk per share, $2, and the trade plan is going to give him his maximum position size, 500 shares. You cannot, the trader, if he's following the trade plan, he cannot exceed his maximum risk per trade. And for the convenience of the traders, we made that trading plan calculate what's your maximum position size, so you don't go into a maximum risk, or you don't go beyond your risk, or you don't freeze when things go against you. It's telling you, the whole thing is automated. It's telling you exactly when to get in, when to get out, how many shares, what's the maximum risk per trade, what's the maximum risk per share. It's just beautiful trading plan, and that particular trader just executed it beautifully, and let me show you why. So he bought the green reversal bar, which is this one right here. As soon as that bar reversed and took out all the red, he got in at 170. Let's see what was his entry. Yep. So he got in 500 shares. He went all in 500 shares at $170.50. That's exactly how he got in right there. So at 174.75, he can put his stop $2 before that. But he went conservatively, and he put it right here, 172.50, and let's see how you went into that. All right. As you see, he bought at 174.75 per share, and he put his stop loss at 172.50, which means his risk is $1.75 per share, which is below his $2 risk per share he is doing exactly what he's supposed to do as a trader. So he goes in there. Now he went entry, right? He bought long 500. He goes into his trading plan on the left side and he puts $500 right there. I mean 500 shares. How much? The shares are at $174.75. Did he go long or short? He went long. He bought. Did he go with the trend or against the trend or counter trend? He went with the trend. And as he's going in the trade, he is documenting this. He could have this on the computer and do it, write it or type it, or he can have this just a hard copy or a paper copy in his hand, and he's just hand filling it as he's trading on his cell phone, on his smartphone. Where did he put his stop loss? Set at 172.5. What's his initial risk? Now his initial risk is $75 per share. So for $500, I believe it comes down to $875. That's his maximum. That's his initial risk. $875 out of the whole $500. $875 risk. So build up strategy. He did not add anymore because his, like as we said, his maximum loss per trade is $1,000. He's already at $875. There's not a whole lot of room to add. So he did not. He is a disciplined trader. He did not push that trade, even though it was a winning trade for him. He did not push it beyond its limit. He left it the way it is. He did not add. He just moved on. So his total risk still $875, and he assumed that he decided that he's gonna have a trailing stop $2 per share, but he was doing it mentally. He did not do hard stops. Okay, all right. Let's see what else he did. So, boom, comes down to his profit objectives. The third step. So the first step is your playbook, the trigger. What triggered you to take that trade? Second thing is interest strategy. Why did you get it? How did you get in? And how many shares? What's your maximum risk? All of this is documented on the left side, which is the PDF trading plan that we can provide you if you can email us at daytradingfans@gmail.com. Now it's time for him to take profit. The trade is going in his favor. And what he did is he took that 500 shares and he split it into like a piece of pie, into 5 slices. Each slice is 100 shares. And as the market made money available to him, like Mark Douglas always said, he booked his profits. Every time the market moved up, he took a slice of the pie. And let's see what he did. The first share, the first slice, the first 100 shares, he sold it at $2, which is 1-to-1 reward to risk ratio. Let's say that again. He was risking $1.75 per share. The first profit he took was 2.25 per share. So he scored more than 1-to-1. So he went in there on his trading plan and he scored after he put in his order, and he put in 100 shares. And what's his profit? $2.25 times 100, $225. That's the first slice. Give him $225 and reduce his risk again in case the market just tanks right after he takes that. A lot of people actually ask that question, a very good question. Why would I take profits at 1-to-1 reward to risk ratio? And that's a great question. A lot of people don't do it. And if you are an advanced trader, you shouldn't do it either. But if you're a beginning trader and you still don't know what works and what doesn't work, that 1-to-1 is going to tell you, is going to validate if your trading strategy, if your trigger is actually a valid trigger. If you're still struggling, as soon as you buy, it goes against you, or as soon as you sell, it goes against you, and it seems like you never get that 1-to-1, there's something wrong with your strategies. So contact us and we'll help you out with your trading strategies. So pretty much that 1-to-1 as a new trader validates your strategy. It tells you you're on the right side of the market. And if you do a 20 trades, for example, and you're not hitting that 1-to-1 at least 10 to 15 times out of the 20 times, there's something wrong, not with the trading plan, not with your trading, but with this, with your trade triggers. And that's a lot of a lot of people actually make that mistake because they're a lot more focused on lagging indicators like moving average or things like that, and they're always on the wrong side of the market because the lagging indicator is always behind the market, not at the market. So if that's your problem, let us know and we'll help you out. I can guarantee you we can get you to consistency within a week to a month. You can be consistent, profitable trader. All right, so let's see what this trade actually the trader did. So he moved on to his trade. He's waiting for the market to do what? To give him his second step was now he scored the 1-to-1 reward to risk ratio. He's looking for the 2-to-1, the 3-to-1, the daily target, maybe a whole number. There's a whole another ways of booking profits or stopping out if it moves against him. Let's see what he did next. All right, second one, the market still went in his favor and went all the way to $179. He doesn't wait until the stock Tesla goes to the moon, as Elon Musk says. He books his second slice of profit, 100 shares at $179, giving him $425 extra of profit. And guess what he did? He's looking for the third one, 3-to-1 to reward to risk ratio. And believe me or not, usually that $180, that number 10 is a natural resistance. There's a lot of times when you come into that 180, 190, or even the whole number like 179, 177, all these are natural support and natural resistance. When it comes to the 10th, like 180, 190, it becomes super natural resistance. It becomes even amplified resistance and support. But in this particular scenario, that bar right here went right through the 180 all the way to 181. What he does, he sticks with his trading plan. He books his third slice of profit, another 100 shares at $180 per share, which gave him $625 in profit of that third 100 shares. So now he's looking for what? The next step is $2 more, which is 183. But as we said, the markets already ran so long. So let's see what happens after that. Yep, the market took a turn against him. Now he's got 2 more lots or 200 shares of profitable trades that he bought here, and he's still holding on until here, and he has not got rid of them yet. So there's 100 shares. He's free to do whatever he wants with it. That's exactly what we tell people, we tell our traders is you have 100 shares to play with. This way you can develop that muscle memory of where is your limit, when you buy, when you sell, things like that. So 100 shares, what he did is a beautiful execution. He took that 100 shares and he put a stop right here at $179.99. He realized that 180 is a super natural resistance, and he said if it violates the resistance, most likely the market is going to just reverse. And he put a stop loss for 100 shares at this particular one, and the market, boom, went right through it, as you see. And he booked at this, even though he stopped out. This is the beauty of it. He goes to his plan. He went at stopped out, and he put 100 shares, but he did not lose a penny. Matter of fact, he made $524 on that particular 100 shares. Notice that every time our trading plan, every time you add a number here, it calculates everything here for you. Right there, you see? As you take anything away, it calculates everything for you. This is a fully automated PDF format trading plan that you should always use. Please, if you don't have a copy of it, please email us at daytradingfans@gmail.com, and we'll send you a copy, and we'll also send you all the updates every time we update that copy. So get in touch with us and we'll help you out. All right, so now he's still got 100 shares, one more 100 shares of profitable trade that is sitting right here right now. He's still waiting to see what the market is going to do. His profit objective is next is pretty much 4 to 1 if he can. Could be a whole numbers, maybe new high, new low, high of the day. He's still looking for something else to see what the market did, and he was patient when it comes to his trading plan. And let's see what the market did for him. Bam! The market went up back in his direction, just like he expected. It went down. It took 100 shares from him right here. It continued to go down. As we see the 180 served as a natural resistance, pushed it back up all the way down to 177.5. Now remember, his stop loss is down there. He did not adjust his stop loss, which is, I would say, for the last 100 shares, he would at least broke even. I would say this is the only mistake that he could actually have done. He could actually adjust his stop loss from here to here. So even if the market goes down and it triggers it as even, he's not losing money. He still booked $1,275. But I guess he's got nerve of steel, and he followed his plan and continued to do. He said, this is uptrend, daily uptrend, intraday uptrend, so he's just gonna keep with it. And the market went all the way to $183. He sold his last 100 shares at the, I'd say this was his daily target, I guess. So 100 shares at how much profit do you think? $825 per 100 shares. He almost made $1,000 on 100 shares. And bam, once he puts it in, look at that. This one is supposed to be 524. Look at that. At this particular trade, out of his cell phone, he made $2,624 out of 500 shares only. Now he was willing to risk 875, but he scored $2,624 with a perfect execution on his phone. Now let me tell you, this particular trader is not a full-time trader. He works full-time. He was doing this on his break of work. Every few minutes he goes onto his cell phone, he adjusts the bracket orders, which means he puts in, when he put in that order, he's gonna buy at 174.75. The stop loss is gonna be at 172.5 for all 500 shares. And if the market gives him more, he put in 4 orders: 177, 179, 181, 183, and he left out 100 shares as a free to play with. So all of these trades, all of these shares that he actually got hit at 174, 179, 177, 179, 181, and 183, they were pre-ordered. He put them in the minute he put in the buy order. So he put the buy order and the sell orders together, and the market executed it for him. He didn't have to stay stuck to the screen all day. This trade, if you think about it, this trade started at like 9:35, 9:40, and he was completely out of the trade by maybe 1500 hours. But he didn't have to stay in the front of the screen. A lot of people, they do that. They just stay in the front of the screen. Doesn't matter if it's a computer screen or a cell phone. They just want to watch every single candle. That's because their mentors telling them, listen, you have to do this, you have to do it bar by bar and stuff. If you have time for this, more power to you. But I can tell you, most of our traders, they don't have time for this. They work full times. That's why they trade on their cell phones. And that's why they're consistent, because they are not subject to the market ups and downs, which negatively affect their psychology by making them losers every time. So when he set that trade at 940, with 2 things would happen. 3 things could have happened. Either he gets his stop loss hit and he loses $875, and he would accept it because he's not even looking at it. He would just open it up again at the end of the day, realize he lost 807. His stop loss is $875 got hit. Or it could have been just like it happened right there, where the market executed every single the pre-order or pre-sale order that he put in, gives him all the money without having to put so much work or so much emotions into it, except for that 100 shares that he played with. Or it could have been in the middle, did not hit anything. It just stayed stagnant and just went up, up, never hit 177 and never hit the 172. And sometimes the market does go completely dead, like Black Friday, for example. The market did not move at all, not up, not down. It just sideways the entire time. So there's some times where this happens, but he put in his order, his buy order, was his stop loss and his profit objectives all at the same time, and the market rewarded him for being a disciplined trader. Again, if you're struggling with consistency, now I can tell you what I did. Every single trader experienced winning. The question is, are you consistently winning? Which means when you lose, you lose $1 and you make $2. When you lose $1 and you make $3. When you lose $1 and you make $4. Or are you the kind of guy that loses 1,000, wins 1,000, loses 1,000, wins 1,000, loses 1,000, wins 500, loses 5,000, makes 300? If there is no consistency in your outcome and losses, then there's a problem that we can talk about. We can help you out with it, either by giving you the tools like a trading plan you can execute by yourself, or we can help you by mentoring you and guiding you through what needs to be done. If you have any questions, please let us know. Our email is daytradingfans@gmail.com, or you can reach us by any social media. Just Google Day Trading Fans. It's going to come up with everything from Udemy to website to an app to Facebook, YouTube, everything. We are on all major platforms. Matter of fact, the best way to contact us is through our app, Day Trading Fans. It's available on Apple Store and it's available on Android Store or Google Store. If you can download that, there's a chat on the top right corner of that app. You can click in there. You can chat directly with the mentors, or you can chat with other traders. You can even post your trades and ask your other traders to give you feedback, what went wrong. So there's a lot of tools we can help you out with if you're willing to listen and if you're receptive to any kind of recommendations we make. I hope you become successful. I hope you join our team or you join our community of day trading fans. It's a day trading club. Go ahead, contact us or join us in a way or shape or form. Or if you need any other courses to teach you how to use that trading plan, please let us know. If you need a copy of that PDF format to use it for your own, please, we'll give you a free copy. Email us at daytradingfans@gmail.com, or we'll send you a copy right away. Have a good day.